Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the market real quick. As we can see here in the major pattern, we were moving up on the high of the day. We got right to the previous wave 5 high. We still have this zigzag pattern that's in place, the B wave right around 50%. Moving up, we hit the 10-day moving average on the low, which is pretty much where we're trading at the time of this recording, which is just before the market closed. So things could change just a little bit before we get to the close. But we opened higher and we're trading higher earlier. But I'm going to switch over to the daily chart and show you exactly when the market turned. For some reason, this seemed to be a surprise to the market. But President Trump came out and announced that the 25% tariffs were going to go into effect on Mexico and Canada tomorrow, as well as tariffs on China. Wasn't quite as specific on what those were going to be. It's exactly what he said he was going to do, and even said they're going to start February 1st. But right when that news came out, boom, the market went down. So another cool thing about this software is the intraday charts. So you can get live intraday Elliott Wave. And you see down here where it wants more data points. So if you just condense the chart in and you give it 377 bars, these are 3-minute bars, it'll give you an Elliott Wave pattern if one exists. And there we go. So it showed up and spread it back out, and you can see that we are in a wave 3 to the downside on the intraday chart. So that's right when it occurred, right when he came out and announced those tariffs. So like I said, I don't understand the market's reaction. This was well telegraphed. I know there was some hope that perhaps some further negotiations could occur, but so far it seems, unless there's some last minute negotiating, that's what's going to happen tomorrow with the tariffs. So that sent the market down, but we are holding the 10-day moving average, which is important. We'll see what happens over the weekend. And if we calm down and turn and go back to the upside. There was some economic news to talk about today. The PCE report was released, the Fed's favorite inflation indicator. It came in basically in line, but the year-over-year number is still, quote, sticky, as the media loves to use that term still. On inflation, a couple things that I thought were interesting. Personal income was up 0.4, but personal spending was up 0.7. So as consumers, we're continuing to go into debt, is what I would read from that. But when the headline says in line, that sounds good, but it's still above where we want to be. We did have a Fed governor that came out today and said that she wants to see more evidence of the fact that inflation is going to continue to come down towards that 2% area before she would consider any more rate cuts. And that's kind of pushing it back off again towards maybe the end of the year. She was talking about possibly the end of the year. So that didn't seem to affect the markets at all this morning. It was the news release about the tariffs coming tomorrow is what caused it. The VIX moved up a little bit. Not evidence on this chart because we haven't closed yet, but it's not significant. A little bit of a bounce up in the VIX, but we're still in this area here between 15 and 17 and a half. What's interesting is when we go to the bond market, so we take a look at TLT, that's been helpful to the equities market, this little bit of a bounce higher. Remember, the TLT is the 20-year, and this is prices. So as prices go up, yields and rates come down. You can see that we are ticking down today, which means rates are ticking back up. That's not helping, and that's all coinciding with the potential for tariffs. Now there's arguments on whether or not tariffs actually do import inflation or not, where it had been kind of widely viewed they do. Well, now that they're coming, they're like, oh, well, maybe they don't. It's just wild to watch the financial media and how they always spin things to their ulterior motives. But the bottom line here is if we continue this slow rise up in prices and tick down in rates, that could be helpful and supportive to the equities market. But how far does this bounce go? We're not quite sure we're done with this wave 5 to the downside, but it's at an exact level that you would expect to get a bounce right at 100% extension on that wave 5. And just what a really well-formed 5-wave pattern to the downside. I've talked about that the past few weeks, but it really is about as classic of an Elliott wave pattern as you would expect to see. Complete with that zigzag that, I really like zigzags in the wave 3, my favorite directional pattern to trade. Worked to a T. Then we had the wave 4 bounce, and then the exact extension you would expect from a 50% wave 4 correction. So the bond market doing exactly what it should do, and the Elliott wave patterns just nailing it. Spot on. So as mentioning earlier with the live chart, if you haven't gone to hub.com, go get a copy of this software. You get the free Elliott wave. You get the free live Elliott wave on the intraday charts. It's a great piece of software. So go get a copy of it if you haven't already. Now, some of you ask about TNX, so we'll go ahead and throw that in. That's the 10-year. I used to show this, but I've been switching to the 20-year, just try not to show as many symbols in an effort to save time in these recordings. Respect everybody's time over the weekend. Appreciate the viewing. But this is rates now on TNX. So this is the 10-year, and this is rates. So you can see rates came down. So it's the same thing as the prices going up on TLT means rates come down. Here's the indication of rates coming down on the TNX, and look where we are. So it is a good time to look at it. We're right at the 50-day moving average. So is that going to be it? Are we going to tick back up in rates? We might, especially with the tariff issue, et cetera. But how far? That's going to be something to watch over the next week for sure, is how rates handle these levels, because we've had the bounce in prices. We've had a little bit of a drop in rates, but we're right in an area where things could level out, and we do have just a little bit of a zigzag pattern here on the TNX, and right at a 38.2% B wave correction yields a 61.8% extension. That's right where we are, and the 50-day moving average. So do we turn and move back to the upside now in rates? We might. Well, again, we'll be watching that very closely next week. Let's move to some of the other U.S. markets. The DIA, the Dow has been really pretty interesting with the movement to the upside that it's had. You can see that channel that it was in. We broke out of the channel. We moved back up. We got just a tiny bit away from the 10-day moving average, but not too much in the overbought range. But we have not taken out the wave 3 high like we have on the S&P, even though the SPY just barely took it out. But we haven't quite made it to that point yet, and opened on the high, trading at the low at the time of this recording, just like the S&P is, because all the markets reacted to that news on the tariffs being enacted tomorrow. But we're still above the 10-day moving average. So again, all this could just calm down over the weekend, and we go back to the way things were with a little bit of a move to the upside the start of the week. But we don't know that for sure. If the tariffs actually do go into effect and the market decides that, no, we don't really like that, Monday could be a little bit more volatile. So it could be a retracement, or it could be a continuation of what's occurred today. That's going to be fun to watch. So on the Qs, and that's where the live intraday stuff comes in. It's really fun to watch these big moves intraday. On the Qs, we talked about this last night in the insiders meeting for alert subscribers at evotrader.com on how were we going to come up and fill this gap. Well, we did today. On the early trade, there's where we opened. We came up, we filled this gap, and now we're back down trading near the low of the day here on the Qs as well, but also holding the 10-day moving average. So you can see all the markets are sitting right on that 10-day moving average. Can that hold as support? Again, what we'll be looking at as the start of next week. The IWM, the small caps, now you would expect those to be a little more susceptible to this little tick up in rates today, and they are. So we're below the 10-day moving average on the IWM. So once again, the IWM is the one that seems to be in close concert with what's going on in the bond market more than the other equities markets have been. So breaking below where the 10, 30, and 50-day moving averages, we're all at the exact same spot on the IWM. We've broken below the 50-day moving average. So we have this support line that I've drawn there at the 225 level. Can we hold that? Another cool thing about the software, as a reminder, when you look at a chart, and you draw lines on it, support, resistance, arrows, whatever. Next time you bring the chart up, the software remembers what you did, so you can go back and look at it. You don't have to try to remember, what was I looking at on this chart? It reminds you and shows you. So the IWM will be watching 225 to see if it can hold that at the beginning of next week. Let's go ahead and take a look at the metals. So we'll start with gold. GLD, we did take off our strangle. Somebody asked, why did I do a strangle in last week's recording? on the GLD rather than a straddle. An interesting question. The straddle, when I was in business school, was the one option strategy that they taught. That was it. That was the only one, was a straddle. And straddles are very difficult because you're buying an at-the-money call and an at-the-money put. So you're paying the greatest amount of extrinsic value. So you need the stock to move a lot. The reason I do strangles, and this is kind of how I made my name in the world of options, I wrote a book about it. The strangles are not a traditional strangle, which a lot of people feel is harder to make money than a straddle because you only go one strike out of the money. That's not the way I do strangles. The way I do a strangles, we go down and we look at the delta curve. The delta curve is a big lazy S. It's not a linear move in a 45-degree angle from lower left, upper right. It's a lazy S. You can go out on the internet and see a depiction of what the delta curve looks like. So what we do is right around that 25 to 30 delta is where you get the greatest acceleration in delta through gamma. And so you buy your out of the money call and put right around the 25 or 30 delta. And then once you get a breakout move, one of the options is making money as fast as mathematically possible, whichever direction we move. The other one's losing money as slow as mathematically possible. That's the gist of what we do at the volatility strategy at ewotrader.com. So that's the reason. Mathematically easier. No guarantee, not easy. You still have to have the stock, but I would put up competition on that strategy versus a straddle on the amount of profit that you can make on a breakout move. So that's why we did the strangle here. So we exited it here. We came back down. Now we've moved back up, but we're off the highs on GLD as well. Now we talked about SLV. We've been talking about this a lot. And when we talk about SLV here, you can see that we were mentioning the possibility that SLV plays catch up. And some of you made notes on that. Obviously, not the same kind of move that we've had in GLD, which has been quite interesting. We got the gap up yesterday. These gap a little bit more than equities do. So you're not so concerned with the gap filling with GLD and SLV like you are with a traditional equities chart where we know the gaps are going to get filled. High percentage chance, but just a matter of when. So we're coming back down a little bit, but with that big move up yesterday, just a little backing and filling today, I still think there's a chance that we continue up, at least back to this previous 4 on the SLV, because the wave 5 finished here less than 100%. That normally means a retracement back to the previous 4. So we could have a little bit more to go on SLV, but is the interest rates, is the inflation worries on the tariffs, is that going to slow this move down in the metals? Another thing that we'll be looking at closely next week. Let's move to energy, looking at UNG. Gosh, we've talked about this just when it looked like we were finally going to have something going. We get the big wave 4 retracement. We did get a little vertical and a little too far from the 10-day moving average. You know the rule, no security in any time frame gets too far away from 10-day moving average. So we came back down to that, but now we've broken below it. Now we're almost getting a little bit too low. And we're at a 4 here that's been labeled right at the 50% correction level, also right at the 50-day moving average. If we're going to get a bounce out of natural gas, and I have no idea what natural gas is going to do because it had a golden opportunity with the cold front that came down. It snowed in Florida. It snowed in New Orleans. Once in a lifetime events you would think would have put a big bid under natural gas. Didn't happen. So can we hold this wave 4 and hold the 50-day moving average? That's what we're going to be looking at there. Oil, who knows what happens with oil next week with this with the tariffs, with oil supply that a lot of the U.S. Oil companies utilize some of this foreign oil, and with the tariffs, how's that going to affect their view of profits, et cetera. So we'll be watching all that stuff. I do think Monday is going to be a bit of a volatile day, so it should be fun to trade, as I mentioned earlier. So here we had oil. I mentioned this before, so I don't need to reiterate it. Got a little further than I thought. I really expect us to stay in this big trading range here on oil, and I feel like that's a pretty good estimation moving forward. We got a little too far. We're back down. We're at the 50-day moving average. We're right at a 50% correction here. So isn't it interesting that both natural gas and oil are at a 50% correction on their wave 4? If those both turn and go back to the upside, and we continue to get rates to turn back to the upside, that's going to be challenging for the equities markets. So again, we got a lot to look at next week. So make sure you tune into next weekend's recording as we update these things and see where things go. Let's move to the crypto world. Bitcoin was doing pretty well. It also moved down when the market did. So risk tolerance trade, if you will. But we were holding well above 100,000. We still are. So at the time of this recording, you can see it ticking. It's live. So we're right at 100,000, 101,800. But we are below the 10-day moving average. That's not quite as important, I don't think, on Bitcoin. You do want to see this 100,000 level here hold because it's a big round number. It's been consolidating nicely from the low that occurred back in the middle of January. You want to see that continue where the action was earlier. It still is a little bit, but not quite what it was before the news event came out this afternoon, is Ethereum. So we have the wave 4 here, just one bar, but right at the 61.8% level. But we have this descending triangle here, as you can see. All the major moving averages, at least the ones that I look at, are all converging here. That's what happens when you go through consolidation like this. Remember, a descending triangle does not mean a downside breakout. It just means a breakout like any other triangle. And it looked like we were trying to make the breakout this morning. So Ethereum was off and running, and then not so much. And you can see where we are right now. We're back within that lower trend line of the lower highs. So it kind of squelched that. Can we turn and regain momentum over the weekend or early next week in Ethereum? It can play a little bit of catch up here because it hasn't been following along with the other cryptos that we look at, including Bitcoin and taking a look at Cardano here with this little bit of a descending triangle pattern, but also really good consolidation here, holding in nicely in the area of $1 after that big move from 25 cents to $1.25. Heck of a move post-election or election night. And then here we just continue to hold right there in the dollar range. So do we break out on Cardano as well? I think we're going to have to see what happens, but it does look like we're going to get some moves out of the crypto space, perhaps over the weekend or perhaps early next week as well. XRP is one that we've been talking about a lot. We've been talking about this during Trade Finder as well. It's really kind of caught hold of the general public, even those that weren't quite so interested in crypto. Everybody asked me about this when we talk about it, as I said on Trade Finder, have been lately. And by the way, when I'm mentioning Trade Finder, if you haven't signed up for it, you can sign up for Trade Finder using the link that you see on your screen right now. We do it every Tuesday at 1 p.m. Eastern time. So it's during market hours. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a great community. So love to have you join us. So if you haven't joined Trade Finder, go ahead and do it from the link. Again, it's free. So I'd love to have you join us on Tuesday. But you can see I've talked about this. This is my favorite breakout pattern. It goes back to my old golf pro days when I can remember when golf flags were triangles. Now they're rectangles. But when you get this vertical move up, it's like the flagpole. And then you have the flag. It's a symmetrical triangle. This pattern breaks out. Can't tell you which direction. I have no idea which direction it's going to be, but this pattern breaks out. So something is going to happen in XRP, and it's going to happen relatively soon based on this pattern. So it could be an upside breakout or a downside. I know some of you said you were hoping for an upside breakout. I know a lot of people watching this stock, so that's why I spent a couple extra minutes on it. We still have a potential wave 5 higher. We made it right up to the bottom end of the tap box. That's time and price projection. That's where the wave 5 is. We do have the center of the tap box right at that big round number of $4. But we're hanging around at $3 now. But if we do break to the upside, that would bring us right about to that $4 range. Or if we break to the downside, that's going to bring us back down towards $2. So a big potential move coming in XRP in the not too distant future. So keep a close eye on that. Let's go to some stocks of interest. And as a reminder, we're going to look at SMCI that you all asked about. And I wanted to show some different ones this week. We've been showing the same ones over the last few weeks. And thanks for your suggestions on some other stocks to look at. We haven't looked at SMCI in a while. And as a quick reminder, we are giving away, just like we did last year, this year, one of our free level 3 subscriptions each and every month throughout the year. All you have to do to register for the giveaway is to leave a comment underneath this video. And it includes our time strategy, which is our sideways-based income strategy. Look for stocks that have a big drop, volatility spike, and then we sell in that volatility spike and try to generate some income from that. The triangles that I was talking about, the volatility strategy with that specific way of doing strangles that I mentioned, and the AI-based impulse strategy, which does focus on those zigzags within a wave three, my favorite directional pattern, and it's AI-ified as well. And it's been working amazing since we started mass sending that out to subscribers in September of 23. So for thousands of dollars, you can go to the website and see. We're giving away one free every month. And again, all you have to do to register is leave a comment. We do appreciate your comments. Thank you. I appreciate your viewership. We are trying to push towards 50,000 on subscribers. So if you haven't hit that subscribe button, please do so. If you know somebody that you feel might benefit from these videos, love to have you refer them as well. So on SMCI, haven't talked about this one in a while because it's just been quiet ever since all that negativity came out. We had the big drop. It was all the rage. And then it just got stopped in its tracks. And it just really hasn't done a whole heck of a lot since September. We did have a little bit of a drop here in the wave three. We held that support level at 20 and drew that, weeks ago. And that's what I was talking about, how software remembers what you've drawn. We did have a bounce up in the wave four. We're only at a 30% level here, and the algorithm still has that green, which means it's not sure that wave four is done yet. So there is room for potential further move to the upside on SMCI. We may get to the point where investment managers start moving money around. They start looking for stuff in the tech world that hasn't performed as well. And it seems like there could be some renewed interest here. It was such a darling in the market at one time. And guys ask about it every single week. Now nobody really does, and until this past week. But we could get a little bit of a bounce there. So far, just this side. The longer we go sideways like this, the greater the chance is that we're going to get some sort of a breakout type move. It's not the same as a triangle, but consolidation is consolidation, whether it's in a triangle or sideways. So we'll see if we can get a bid, but it would only be interesting to me as if we got back above the 50-day moving average. If we can do that, which is that royal blue line, then I think we might have something there. You ask about Starbucks. We hadn't looked at that in a while. A great earnings report that they had, surprising to some. Note that this arrow that I had drawn going back after the wave four had started, right at 55%, so right between a 50% and 61.8% wave four correction. It's colored purple, so that was done. The wave five at 78%, and look at that. On that earnings, the big gap up on earnings right into the dead smack middle of the tap box. Elliott wave is amazing. You need to look at it. It's not easy. So nothing worth having comes easy is something that I believe in. But if you really want to learn about Elliott wave, it can be an effective toolbox or an effective tool in your toolbox as far as technical trading. So big move up here, consolidating nicely so far. We'll see if we can continue this little backing and filling in a bit of a sideways move. The key thing here is, can we hold this wave three top? That's what we'll be looking for. And note that that's also right above that big round number of 100. So can we go sideways and get a little bit more out of this? Maybe that's it for a while. And we do go sideways, but the level you want to watch there is that wave three high right around 102. If you're long Starbucks, if you're long, I don't see any reason to get out. But if you're looking to get in, I would definitely wait for it to come back down a little bit. As you can see, we're a little separated from the 10-day moving average, and the 10-day moving average is right around that line that I drew at the top of the wave three. So it's a little bit overbought still. Let it calm back down, go sideways, or back up a little bit and let the 10-day moving average catch up. And then we'll see if there's any further upside to be had on Starbucks. And everybody's been asking about a lot. Taiwan Semiconductor, TSM, it was doing well earlier today also, and then it's reversed with the market. And, of course, the tariffs will have some effect here as well. But we do seem to be moving back up to fill that gap. It'd be really surprising to get this far and not go up and fill the gap. So I think there could be a little more to the upside here on TSM, especially if we hold this 10-day moving average, which at least at the time of this recording we are. We'll see if we can hold that and then turn and bounce back up at the middle of the week. Now, once we fill this gap, again, we're right in the middle of the tap box. The wave five is solid, so it's purple, so it means that that wave five could be finished. It's at 85%, which means that a move less than 100%, you move back to the previous four, which was at 61%, right on that, my favorite of all fib levels, 61.8. So acted as a good point of support for TSM. We had a nice wave five move. But we didn't correct all the way back. We got close, but not all the way back to the previous four. So we have to keep that in the back of our minds. But for now, the short-term view would be, can we continue to climb up and fill that gap? And if the market does calm down on all this tariff worries and we don't get anything too significant of a spike up in rates, I think we could see that gap get filled. United Airlines, and be remiss without sending thoughts and condolences out to the families of those involved in that tragic plane helicopter crash that occurred in Washington. You've all heard about it, but just wanted to add our thoughts and condolences there for someone that's flown as much as I have. You hear stuff like that, and it always rattles you a little bit. But United, you can see open a little bit higher, trading a little lower now, but really just consolidating this move from its wave four. Now, this wave four was only at the 23.6% fib level, and Elliott would consider that just a blip on an otherwise big impulsive move. He would label it because it is a fib level, but if you read his works, and I think I've read everything that, not just the stuff that's been published by Elliott, but his notes and observations as well. If you're an Elliott fan, you know there's a difference between rules and guidelines. And you read his notes, there's a lot of guidelines and thoughts in there. And he would label this. So the algorithm, and this algorithm from Hub is labeled exactly as the algorithm was written by Ralph Nelson Elliott. So it labels it because it's a fib level. But he would look at this and say, we could get a relabeling here if we get a more significant correction. But for now, United doing pretty well. And as long as energy prices stay down, fuel costs stay down, the forecast is, we set a record for airline travel last year, and we're on pace to beat that this year. So it seems like this could be a good place. I don't think you're going to see any sort of a big, huge move to the upside here, but we could get a little bit of a drift higher in a decent market and with reasonable oil prices, fuel prices for United. Then we'll finish off. You ask about it. We look at this a lot. The INDA, and gosh, the financial media has been all over the map on this. Some are saying there was a headline that I read over the weekend that said that there was a mass exodus from the market in India through investment managers. And I was thinking, that means that's the end of the downward move. Because when you get those headlines, we've talked about that. If something appeared on a magazine cover, it was time to go the opposite way. Because by the time it made it to the media and a magazine cover, it was the end of the move, as the retail public usually comes in last. So I was expecting this bounce just based off that. So we got this little bit of a bounce, but the wave three is not colored purple yet. So not convinced that the wave three is completely finished, but we did hold 50 here. We're getting a bounce. We did have that separation between the 50-day moving average. So we'll see if we can travel back up towards that 50-day moving average here on the INDA, and then we'll have to see is this wave three indeed finished, and if it is, and this is the wave four bounce, does that label, which means that we could likely see a lower low at some point in time. But for now, a little bit of reprieve from the selling. That the market in India, whether you're looking at the INDA or the Nifty, had one heck of a run over the past couple of years. So I really think that this is constructive on this little bit of a correction here. Nothing goes straight up forever. And we had an awful lot of wave fives that relabeled to threes on the way up, and now we had one on the way down. So I'd look for that perhaps back up to 52.5, and also where the A wave was in the zigzag here in the wave three on INDA. So perhaps a little bit more of an oversold bounce, and then we'll have to relook at it and see where things may go from there. So as always, thank you so much for your attention. Appreciate you taking the time to view it. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.